most people are paying taxes the wrong way. Now, if they understood the right way to do it, they would increase their values of their money greatly going forward. And by the end of this video, you're going to begin to understand what I'm talking about by most people are paying taxes the wrong way. Now, there really only are three ways to grow your money. You can grow your money taxed as you go, you can grow your money tax deferred, and you can grow your money tax free. Now, which is the best way? Well, the answer to that question is not what you think it is. Most people think the best way to grow your money is tax-free, when in fact, sometimes it's better to grow your money tax-deferred. In other words, that's based on what your exit strategy is. So if I can put the money in at, say, a 25% savings, then I can take it out at a 20% savings, then I actually save and make more money on that money. But if I put it in at 25 and take it out at 25, there's no difference. And if I put it in at 25 and take it out at 40, I'm actually behind. So frequently, tax-free is better, but we're here to talk about why people pay taxes the wrong way, which is most people over here in these taxable accounts, which is the worst way to grow your money, are doing it incorrectly. Now, what do I mean by that? So let's just take a quick look here at this chart and understand how money works. Well, what money does is money comes down this great big tube over here, and it comes down here and it hits this tax filter, and then it's consumed and it's gone forever. Now, the way we bypass that tax filter is we would go through this tube and we put it over in here in what we would call tax-deferred accounts. So those tax-deferred accounts would look like this, and that's what this is. We're deferring the taxes out to a point in the future where that tax may be the same, higher, or lower. We don't know yet until we've actually sat down and done some kind of planning. The other way to do it would be to pump money up these pipes. So we pay the taxes and then we pump the money up here. And then when we get to here, we either put it over in the risk side or we put it over here in the safe side. And we could put that in a Roth IRA or a tax-free account. But once again, we're going to talk about the tax-as-you-go money and how people pay taxes on that and why frequently that's probably not the best way to do it. So how does a taxable account work? Well, what happens is once again, the money comes in, it hits that tax filter, taxes are paid, and then after those taxes are paid, that money either goes out to lifestyle, or we pump that money up that pipe and into that tank over there. Well, when we do that, that's all after-tax dollars. But at the end of the year, we're going to get what's called a 1099. So on our CDs, as an example, our checking or savings, most brokerage accounts, what we're going to get is we're going to get a 1099 at the end of the year, and we're going to have to pay those taxes. Now, we have a couple of different ways to pay those taxes. So paying them on an annual basis, but how do we pay those taxes? Well, the average person, what the average person does is they go and they don't pay the taxes from the account. They pay the taxes from their lifestyle. But you can see here that if you were to pay the taxes from the account, then that reduces the account balances. And in addition to that, it also slows the compounding process. Now, if we pay the taxes from the current lifestyle, then it looks more like this, which is what most people do. They reach into their pocket, take it out of their checking, savings, or whatever the case may be, and pay the taxes. Now, that helps the account to accumulate faster, but the reality is we're reducing our current lifestyle in order to do that. And if you know anything about me, you know that my rule is live like you're going to die tomorrow and plan like you're going to live forever, because you just might. Well, because it does allow for higher account balances, but at the end of the day, some of the things you should consider is this. Access may be limited on these accounts. In other words, if it's in a CD as an example, we are going to have limitation as to when we can access that without penalty And in addition to that, we would have some return potentials that maybe are not that good, which probably are not going to keep up with inflation going forward. We also have exposure to creditors in the process. So what is the answer? How do we grow our money so that we don't have to worry about these things and we don't have to pay these taxes as we go along? Well, once again, we only have 3 ways to grow our money: tax as you go, tax deferred, and tax free. Given a choice, if you could grow your money tax free, access up to 85% of it at any time tax free, put it back if you want, get most of the gains of the market, never participate in the losses, and when you died, it passed on to 2 to 3 times that amount tax free, wouldn't you want to do that? And of course you would. And how much money would you want to put in that environment? You'd want to put as much as you possibly could. Now, most people have no concept of what I say when I say you should be doing a properly maximum funded life insurance policy under TEFRA, DEFRA, and TAMRA, which are the tax codes out there that determine how much money you can put in a life insurance policy and how little insurance you can buy in the process so that you can grow your money tax-free, access up to 85% at any time tax-free, put it back if you want, get most of the gains of the market, never participate in losses, and when you die, it passes on tax-free. Now, if I asked you how much life insurance you needed, you would say none. But in reality, what you're really talking about is you're talking about death insurance, where you buy the most insurance using the least amount of money for the purpose of dying. If you do the opposite, you buy the least insurance using the most amount of money for the purpose of living. You can do all of these things, move that money out of that taxable account over into a tax-free account, and gain all of those things. Hopefully, this helps you to understand a little bit about how these taxes are working and how you might improve your situation. Be sure to like this video and put some comments down below about your thoughts and how do you want to pay your taxes. Do you want to pay the taxes today and grow your money tax-free? Do you want to defer the taxes out to the future and see what happens? What is your choice? Remember to live like you're going to die tomorrow and plan like you're going to live forever, because you just might. Keep smiling and make it a great day.